ROI Properties LLC, Private Money Partners, 2017 Opportunities. ROI Properties. ROI Properties assists investors with realising their dream of real wealth building through diversifying their portfolios with real estate. Today, we are in a position to offer more opportunities than ever for the right investor. The biggest opportunity is the chance to further diversify your portfolio by providing short-term funds for real estate investments. What does ROI Properties do? ROI Properties locates undervalued properties through bank relationships, distressed sellers and other sources. We then purchase these properties, rehab them and either keep them ourselves, sell them to other investors and sometimes to end users. What does ROI Properties do? Number 1. ROI Properties borrows funds from private investors to purchase and renovate the properties. Number 2. ROI Properties sells the properties for a profit in the wholesale or retail market, depending on the property. Number 3. ROI Properties provides the rehabilitation of the project through our extensive network of property managers. Why the need for short-term financing? A significant percentage of ROI Properties single-family home purchases need some form of rehab. We can and do sell many as-is to investors. ROI Properties has found over the course of many discussions with investors that they prefer houses already rehabbed and tenants placed. These properties are purchased and rehabbed by ROI Properties prior to an end buyer or investor purchasing them. Why the need for short-term financing? For us to be able to offer a wide variety of inventory to our clients, we need to close and rehab multiple houses per month, hence the need for capital. How does ROI Properties buy homes so far below market value? ROI Properties creates value by purchasing in bulk distressed properties at a significant discount, which are vacant and in need of rehab and turning them into attractive homes. ROI Properties, having been in the market for years and discussing with hundreds of investors, knows what they want, knows where to look, what to buy, what not to buy, and how to renovate a property to maximise investors' dollars. ROI Properties history. ROI Properties has been in the business of real estate investing for many years now. ROI has bought and sold nearly 100 properties over the past few years using one of the partners' retirement funds. Now that ROI Properties has perfected its systems, we are now offering this exceptional opportunity to a few select individuals. Where to get the funds? Many investors use money from non-performing CDs, stocks, bonds and savings accounts. Of course, you know you can use retirement accounts to lend on real estate. Others borrow from family and friends at a lower interest rate and profit from the difference. How to use retirement funds to lend? The initial steps are: Jim calls Diane at Equity Trust and sets up a self-directed IRA. Jim then applies to be a short-term lender with ROI Properties. Jim receives updates on available lending opportunities with ROI Properties. When a lending opportunity is accepted, you will contact Diane, the custodian at Equity Trust, of your desire to lend to ROI Properties on the specific property. How to use retirement funds to lend? ROI Properties then sends all the information to the custodian at Equity Trust, who will need to OK and release the money to the title company or escrow attorney at closing. ROI Properties makes interest payments or all principal and interest to Equity Trust for deposit into Jim's self-directed IRA. Initial deal structure. After repair value of house, $85,000. ROI Properties purchase price, $39,000. Estimated renovation budget, $9,000. Closing costs, $500. Prorated taxes and insurance, $1,000. ROI Properties expense, $5,000. Total cost basis, $54,500. Return on investment. Principal invested, $54,500. Annualized interest rate of 20%. Annualized return, $10,900. Security of investment. ROI Properties instructs title or escrow attorney. Escrow attorney creates deed of trust. Promissory note with terms of the loan. Hazard insurance. Appraisal. LTV at 64% of market value. What happens when the property sells? On January the 1st, Jim funds the deal for ROI Properties. On January the 20th, ROI Properties finished the rehab and has the house under contract with an investor on February the 1st. With a closing for the investor on March the 1st. Jim has made a $1,816 return in 60 days. CD return $136 at 1.5% interest. Savings account $91 at 1% interest. Stock market $776 at 8.54% interest. Now is the time to invest in real estate. Contact Tom Roysam at ROI Properties to determine your eligibility to be one of our partners.